Good morning. Thank you so much for agreeing to meet with me. But I really appreciate you reaching out to me in regards to this. I know that you are a dual um um career agent like I am. You have you're an agent, but you also have another career as well. So it's really unique for you to be able to kind of have multiple ways to help your clients and, of course, to generate income. Now, my only experience dealing with, these type of loans, I helped some homeowners with a 203K, and I was the contractor on there and, submitted all the paperwork and all of that. That's really my only experience with it. And then as far as, other clients that I've helped as a realtor, most of them are just getting the standard loans. Nobody's really come to me like, hey, I want to get a fixer upper. But I do think that it's important that as realtors and as contractors, we know, and loan officers, we know what products are out there so that we can, help our clients and offer them and educate them and point them in the right direction. Because if we have, say, clients who are investors or who are contractors themselves that say, hey, Adrian, I wouldn't mind getting a house that I have to fix up. What kind of loans, what kind of products are available to me? I think it's very helpful. So I'll just, kind of turn the rein over to you and let you kind of go through, everything. And then if I have any questions, I'll just hop in.
Okay, that sounds great. I tried to put together a slideshow just to kind of pull everything together, and this will be a kind of a work in progress. So what I'll do is I'll take any questions that you might have to perfect the slideshow. I have another realtor that wants me to do a video actually, so I've been trying to put something together to do that video for her
Okay.
as well. So I can share my video, my presentation if you show me how to do it. So I just kind of put this together to help to make it a little bit easier to share the information. There's a lot of information, so I just tried to pull out the most important things that you might want to know. But obviously, I'm not sure. Maybe you have some additional questions that you might have. So I've been sharing about renovations for the last 2 to 3 weeks now. It's just been a fire for some reason because I feel like I said in the meeting we were in, is that I feel like there's just this pendulum where either it's the perfect home with no repairs or renovations needed, or construction where you just create from scratch. And so like there's this middle of opportunity where clients might have, where they could find a home that may not be perfect, but they could put into place some renovation ideas that they might have. So like I said, I've been sharing it for the last 3 weeks. I put this together, just kind of give some overall facts, but again, it's so much information that I tried to put it into a slideshow. But the most important thing for to think about when you think about your clients, I was thinking is that they have to be able to um, qualify for a loan. So that would be the first step. And I think as a realtor, my approach would probably be something along the lines of, we've been shopping for maybe during the consultation, if we've been shopping for maybe a month or so, we can't find the perfect home, would you consider a renovation loan? And just remember, at this point, they've already qualified because they brought you a pre-approval. So the lender that they're working with, they would just have to be a lender that has access to the renovation type loans. So there's two different types that I brought forth, and that would be the Fannie Mae home style renovation loan, and then the FHA 203K, and there's also a 203B and a 203B with escrow. And so those are the things that I'm gonna pretty much hash out today. And then, like I say, this is a work in progress because as I have not had any clients ask for renovation loans, and I have not had any realtors that have come to me asking about a renovation loan.
Well,
So
probably
don't.
because
Mhm.
maybe they do not know that it's available. You know,
Mhm.
knowledge is power, and the way that I knew about the 203K was just someone approaching me, another contractor that I was working with in Lansing, who was actually a realtor as well. And
Okay.
he, hey, Adrian, I got these people, you know, they need a contractor on this loan. Is that something that you would consider doing? And I'm like, well, I mean, yeah, if it makes sense, we can definitely look into it. So that was my first experience with it. But other than that, like, you know, I think if people don't know that the products are available, and, you know, realtors, contractors, loan officers don't know that the products are available, then they're not really going to be able to present it to their
Mhm.
clients and give them that option, you know. And I think right now, with the way that the market is so tight, with, you know, inventory being super low, it's great to be able to have additional information in your toolbox and be like, hey, look, you know, we've put in a bunch of offers, nothing's been accepted. Have you considered, you know, following?
Mhm. Yeah, I completely agree. And maybe at the end we could talk about pros and cons or approaches that might not necessarily work for the client, because I feel like in the beginning, you know, at the consultation, they'll need to be able to, you know, if say if they're only approved for 125, that's just an example. I know that's low, and they're only looking at homes between 120 and 125. Well, they're only approved up to 125. So whatever the renovation is, it cannot exceed the renovation and the home price cannot exceed 125. So they'd have to be willing to go below that, you know, looking at homes below that price point, taking into account that they're going to be adding on, you know, additional value with the renovation. So we can talk about that at the end. I'm just trying to think of all the things that, you know, might come up as a conversation piece to help move this along. Okay, so I started with the Fannie Mae home style renovation loan. And I think I shared some of this information with you. So these are for repairs that are up to 200,000. The renovations must be greater than, I'm sorry, renovations greater than 35,000 require an approved HUD consultant. And so there's a whole list of consultants in Michigan. I kind of looked up maybe a week ago to see, you know, what areas, who's on that list. And they're primarily contractors that are on that list to act as a consultant. There's a period during the renovation with this particular loan where they'll allow the clients to, you know, where the home may be uninhabitable, so that the repairs can be completed. So they do allow for that. And then also, I'm sorry, there's something in my eye. Okay, the repairs must be structural for this particular renovation loan. Eligible property types are 1 to 4 unit primary homes, 1 unit second homes, Fannie Mae approved condos, PUDs, which are planned unit developments, multi-wide manufactured homes, and then 1 unit investment properties are permitted with this type of loan. The repairs and improvements have to be permanently affixed to the real property and add value. For this particular loan, they allow certain things such as what would be considered luxury improvements like swimming pools, hot tubs, tennis courts, and outdoor kitchens.
Wow. Okay.
Yeah, yep. For this particular loan, they do allow that. So this is a good one. And just keep in mind that this is a conventional loan. So the client has already met, you know, some of the qualifications to be considered a lower risk to that lender. So again, that would be the first step to make sure that they are pre-approved for a conventional loan, and then addressing, you know, if you want to use this type of loan within the conventional model or products. So when it comes to the amount of the down payment, so there's different degrees of how much they'll have to pay out of pocket. So, you know, with conventional loans, usually it's 20%. But with this, they do allow, you know, depending on the income of the client, um, down payments as low as 3%. And then it goes according to how many units are involved up to a down payment of 25%.
Okay.
Okay. Um, and then at least one of the borrowers must have the credit score within that limit. And then for both types of loans or all the loans we're talking about today, the minimum credit score that I've seen with all of the lenders has been 620. And there's some variation, but we'll talk about that. So did you have any questions about this particular slide? I know I sent you this information earlier.
No, not, I mean, I'm sure as we get further into it, I'll probably have some additional questions or maybe, you know, some additional requests for something.
Okay, yep, and I'll definitely take that down. Anything I can't provide today, I'll go find the answer. So, okay, this is a little small, and I apologize for that. So this just talks about the variation between the credit score and the amount of down payment. So it looks like most of them. Okay, so the variation with this one just depends on the DTI. And so that's something that kind of the lender will work more on. And you may not necessarily know this part. Um, but 620 again is the minimum, right? But if their score is higher, there's minimum reserves that may or may not be required. For example, I'm going to just focus on the one for 620 since I'm focusing on that right now. With a 1 unit, 620, the minimum reserves is 2 months of reserves, right? So 2 months of the PITI, the principal, interest, taxes, and insurance, have to be in an account.
But
If
basically,
they're
like they would need, like, let's say the amount of the loan, like the payment was going to be 2,500, they would need 5,000 in another account, like as a reserve.
Yes, so they would
Okay.
have to, yep, have that in a bank account. But
Okay.
to higher their score, so 640 and above, they won't need any reserves.
Okay. What if
And
it
this,
was a client that had a credit score of, say, 800?
if they have a credit score of 800, there's zero reserves that are required.
Okay.
No reserves that are required.
Okay.
Um,
They would
and so
just
the other, go
be
ahead.
able to qualify for whichever one they wanted,
Whichever loan whichever
whichever,
renovation.
yeah, renovation product that they wanted. Like
Right,
say it
correct.
was an investor and they were like, hey, I got a credit score of 800. So they're eligible for all of the different renovation loans for Fannie Mae.
Yes, so there's only one Fannie Mae loan, and that's the home style renovation loan.
Okay.
So if their renovations are less than 35,000, then it's a renovation loan. It's still Fannie Mae though, and the requirements are the same, with the exception of needing a HUD consultant, if that makes sense. Okay. And then the more units there are additional reserves that are required. And you can kind of see this on the screen. So this isn't something necessarily that you would have to go over with them. Like you would probably send them to their lender to explain it to them, because the lender would know for sure like what their DTI is. They know for sure how much they have in a bank, and they know, what their credit score is and how all those align with what they're trying to get. So they would essentially have to just make sure that they explain to the lender the type of property that they're looking at, and how many units there are and the value. So we would know all that information, and this is something we would discuss kind of with the client. But it
Okay.
just kind of gives you an overview of what the reserves would look like, because people might want to know, well, do I have to have additional funds available to help with this project? And so the lender just basically wants to know that you would have funds to cover if anything was to, go wrong during the process. So,
Right.
okay. And then, so this was a question that I had, and I know you've worked as a contractor, so you kind of have an idea of what the release of funds looked like, or you were the general contractor, correct?
Yes, I was a GC, and
Okay.
I'm very like, and plus two, with the release of funds for the projects, they want to see progress as well. You know, they're not just going to release the funds like, "Oh, okay, yeah, you guys said you're halfway done, we're going to release it." They would like to see progress, which, that makes perfect sense. I mean, that's part of the process. So, and for my business, we are required, because I primarily deal with mortgage field service clients on distressed properties, we're required to take photos before, during, and after of any repairs that we do. So it was easy, doing the 203K loan, to have the photo documentation to
Mhm.
provide to that client.
Okay. And that's why, this is so helpful to be on with you, and not just as a realtor, but also as a contractor, because, that was my main question. Would contractors be comfortable taking on a project um, from a lender, with regards to how the funds are released? So you're familiar with this. You pretty much know that for the renovation loans, they kind of release the funds in two draws. The first 50% of the base bid will be released at initial funding of the loan, and then to ensure the rest of the project, they kind of require some additional documentation before the final draw of 50% will be released.
Yes, I've gone through that process. And I think, like, any contractor that um, is looking to make money, it's basically guaranteed money, because you're dealing directly with the bank. So, in my opinion, um, and I know that there's a lot of contractors that are maybe older and have been in the business for a lot longer than I have, but in my opinion, and in my experience dealing directly with a bank, your funds are guaranteed. There isn't going to be like a homeowner that's like, "Oh, I don't have the money to pay you," or "I don't like how this turned out." Like, so it's guaranteed money. And in my opinion, it was a great experience. I would rate it 10 out of 10. I got my money, they got what they wanted, and I have nothing but, positive things to say about the 203K. But I think, it depends on the contractor, and it depends on, you know, what they're used to. But I
Mhm.
think it's a good program for sure.
Okay. Yeah, so my question, I'll talk about my questions later, and it's mostly regarding like finding the right contractor because from what I hear, there's not a lot of contractors out here that are qualified, but that's just what I've heard. It's not my experience. So,
Well,
um,
that can qualify as far as what, like, as far as meeting the client's requirements for what they want from a contractor.
right, exactly, meeting the requirements, the professionalism.
Well, I mean, there's levels to contracting, and I mean, of course, we want to stay on track with talking about the loan types, but because that is, how I got into the housing industry, I could, just give you a couple of um,
Mhm,
my tips on selecting the best contractor. Number one, you want to make sure that you verify that person on the Lara website. Um, you want to make sure that they're actually a licensed contractor. If they have a company, or, if it's in their name, if they're licensed, if they have a residential builder's license or an alterations and maintenance contractor license, you'll be able to verify it on that site. That's number one. Number two, you'll want to ask them, do they have a website? Do they have, references? Do they have photos of other projects that, they've done in the past? Because there's a lot of people, especially in Michigan and other states as well, that parade themselves around as contractors, but if you're not licensed, then you're not a contractor. You are a subcontractor, and or just a glorified handyman
mhm,
or woman, doing work. So those are things that I would say are extremely important, is verifying that this person is actually a licensed contractor, and that they're not working under someone else's license, or saying, "Oh yeah, I'm a licensed contractor. Oh, I got somebody to pull my permits." No, can you personally pull your own permits? Can you go to, any city in the state of Michigan, put your license down on the counter and say, hey, I want to register here. I want to pull a permit for X, Y, and Z.
Mhm.
So that's something that, as far as finding the correct contractor, you would definitely want to make sure you do those things, and even Google that contractor's their company name to see if you can find reviews, or maybe people who um are satisfied or not satisfied. They're everything is on social media right now, so you could pretty much, if they're a contractor or even a realtor, whoever, there'll be reviews out there on that person to be able to determine if in fact that person is a qualified professional and someone you want to consider working with.
Mhm. I love that. It sounds like another topic we could
I mean,
definitely.
definitely. I never get tired of talking shop. I love like being a contractor is fun.
Mhm.
It's always something different.
Mhm.
Sometimes you do get burnt out, but I never get tired of talking shop. So if you ever wanna do another one of these where we talk about, the contractor side of it, or, even just showing you, what I do and how I do it, I'm totally, game for that too.
Okay, I want to. So we can discuss that later because I think I mentioned that before, but I never followed through. I think we both probably got a little busy. So yes, that's a definite topic in the coming up. Hopefully, we could do. I think people would be impressed with the information that they could get from that. Okay, just more about the release of funds. So the previous slide kind of talks about the release of funds for projects under 35,000. And remember, the projects under 35,000 does not require a HUD consultant. Okay. But for projects over 35,000, between 35 and 200,000, they require satisfactory inspections by a HUD consultant. No funds are released at the initial funding of the loan, and then all draws that are released within will be released within a reasonable amount of time after the lender's receipt and approval of a draw request from the HUD consultant. So that's a little bit different from projects that are less require less funding. So that's something to kind of keep in mind when talking to the client. Now, just keep in mind the seller has already received their funds. Their funds, they close on the home, and then the renovations occur, because that was a big question for me. Will they be kind of hesitant to take on a borrower or a buyer who has who is talking of a renovation loan because they want to get paid, obviously, um, for the home, but the home is closed on. It is in the possession of the client, the buyer, and then the project kind of begins. So.
Well, I mean, I think that there's no downside to taking on this kind of a loan, because everyone's getting what they want. You're getting a property that you want, the seller is getting a qualified buyer, and you're dealing directly with a bank, so your funds are guaranteed. There's no, oh, like a side deal or any of that. I mean, I think it's a win-win for everybody, especially if
Mhm.
it's someone who doesn't mind, okay, hey, we're going to do the renovations. Because I mean, obviously doing renovations is um it's emotionally draining for, the person who's getting the renovations done, because you've got contractors in your house, or if it's a house you and your family are trying to move into, there's going to be certain time,
Mhm.
constraints and all that kind of thing. But in my opinion, if your goal is to sell and your goal is to buy, there's no downside, because it's just another option on the table for you to consider.
Right. The only caveat, because I like to throw, I try to think of all possible scenarios, is if they're trying to close quickly, because the appraisal that occurs before the project begins is an appraisal based on what the contractor has said needs to be repaired. So it may not be a quick closing. It could be 30 to 45 days because, I think I was kind of perusing some of the comments and quotes on different posts about renovation loans. And one of them mentioned that one of the contractors was not giving uh, the correct type of bid because all and you can talk more of this as well, but you can do it later. More of with regards to the bid, the supplies have to be documented. Everything has to be documented correctly before the work begins. And so the appraisal has to have like a complete tally of what needs to be completed so that they can account for, the before renovation cost, I mean price of the home, and then after renovation cost of loan, because price of the loan, cost of the home, sorry, because that's what the lender is going to fund, and that they're going to fund the value of the home plus the renovations, and it's just one mortgage. So that's just one thing that might, you know, I feel like might deter a seller is that is you're not going to close in 15 days probably. This may take a little bit longer, but that's, a conversation that would have to be had during at the time of the when the offer is put in. So,
Okay.
yeah. All right, so that's what I had for the renovation loans. And I think I might have slipped in here and I'm going to talk a little bit more about the types of projects because it's very vast when it comes to the Fannie Mae renovation loans. But I'll talk a little bit briefly about the FHA renovation loans as well. So again, when your client approaches you or approaches a realtor, they're coming with a pre-approval in hand. So you'll know upfront whether or not they can qualify for a Fannie Mae or if they have to qualify for a FHA renovation loan. Because when they come to you, that you'll know that they were only approved for an FHA loan. So that includes any of the FHA products. The credit score is approximately the same, has to be 620 or above, which typically, with the FHA loan, they go down to at least 580. So that's something that would be again in the conversation in the beginning. So the three types of FHA loans are the FHA 203B, FHA 203B with escrow, and then FHA 203K. The FHA 3B loan with repair escrow finances homes with minimal or cosmetic repairs. So essentially, this home buyer, they've already financed their home 96 point, 5% of the value of the home, and it's a HUD home, right? So it qualifies for that. And then any necessary or qualified home improvements would be in the same mortgage loan. The repair funds are put into a separate account and they're used while the funds are completed.
Okay.
So each lender kind of has their own overlays of what they're looking for or what they would approve. So these are some from one of the lenders that we have, and essentially the contractor bid cannot exceed the consultant's write-up, and it must be within a contingency percentage. There's no raising, demolition of the home to its foundation. There's no physical relocation of the home, and self-help is not permitted. So if someone is like a general contractor, they can't, do the repairs themselves. They have to have at least one general contractor. Well, not at least, it has to be just one general contractor. So if there's work that the general contractor doesn't do, they'll oversee that project, but there can't be more than one general contractor on that particular project. And then the last one might be additional things to think about is that it does not allow for a conflict of interest between the borrower and the contractor. So they can't be related, nor can they be an employee or have an employer type of relationship.
Okay, that makes sense.
hmm I know it makes a lot of sense, but yeah.
Well, I
Okay,
mean,
and
because they want to make sure that everything is above board and above reproach. They don't want any funny business going on. So it makes perfect sense that
mhm,
if you work for a general contractor, that wouldn't be the general contractor that would be over that project,
Right.
because
Right.
it would be a conflict of interest because you guys have a over familiar relationship. So yeah, that makes perfect sense.
Okay. And then also they require stamped and sealed line drawings by a licensed engineer or architect with the statement provided that the permits can be obtained when any type of addition is being done or zoning modification is going to be needed. So these things here are more, these are things I would probably call you up and say, Adrian, what does this mean? Because you're the contractor, and it wouldn't be something that I would, the lender may not be as familiar with. So,
Well,
and
I mean, before
mhm,
you, if they're going to be doing, anything that's going to require an architect, I have an architect that I worked with on several projects, who's very capable, and he's got, um, connects all over. Like because I do some property preservation in Florida, and he actually had an architect, because I called him. I said, "Hey, this is like super random, but I got some stuff that I'm trying to get done in Florida. Do you know anybody?" And he's like, "Oh my God, yeah, I got an architect that, the guy actually lived around the corner from the project." So, um, I mean, architects are really good to have in your back pocket, just because you never know, if depending on the city, um,
mhm,
the city could be very, very strict about how they want certain things done, and you may have to bring in an architect to do drawings or to figure out, like a certain thing that you're trying to do on the project. Like for example, we had a property in Canton, and it was a foreclosure, and my client, contacted me. They're like, "Hey, we need you to go in and we need you to do the following." And it actually turned out to be an amazing opportunity, because it was
mhm,
like an annuity. They just kept asking us to do more things, and we made quite a bit off the project. But there were some things that were done by the homeowner, and she did not pull permits on those things. So they were like, "Hey, listen, um, you need to get an architect in here. They need to do drawings of, the basement, and they need to do drawings, because there was like this wall that she had put up in the second floor." And
mhm,
so I had called the architect in, and he helped us with that, and the city was satisfied with his drawings. So it really just depends on the city. So those are things that, as the contractor or even the loan officer is preparing their client, for those things, they would, let them know, hey, every city is different. So you're going to want to make sure that get that information beforehand, so okay, I will need an architect, or I will need a structural engineer for that.
mhm. This is such good information, and whoever's going to listen to this afterwards, this is why you have an Adrian to talk to, because these are things, it's not it doesn't sound like it's something abnormal to me coming in. I mean, but they're asking for too much, or a client might say they're asking for too much, but this isn't abnormal information that the lender may require from you, essentially. So I thank you for providing that. And then second level review by management. And AFR is just one of our lenders, but we have a couple more lenders, but it just made sense to just pull, overlays from one lender, which, may apply to all the other lenders. But we'll get to that, if a client comes and, maybe that lender can't provide what they need, we'll try, another lender. Um, so AFR requires that there's a second level review to any property that's identified to have a current as is property condition rating of C5 or C6. And I should have put in a slide for that. But what I can do is add that information later, because someone might say, well, what is C5 and C6? Well, we'll provide that to you later. I'll have to pull information for that. Um, and then a loan is subject to additional requirements. And or conditions when it's an as is property rating of C5 or C6. And then property condition rating as determined by the appraiser must be C1 through C4. And again, I'm going to add some additional information to this slide. Um, did you have anything to add to that, or?
No, I mean, like you said, this is we're a work in progress, and
Hmm.
so if we, think we need to add another slide, or even if we need to do, renovation loans, explained further or whatever, we can, do that at a later, time. So, but I think for the most part, everything is laid out perfectly.
Okay, thank you. Okay, and then additionally, if the utilities are off at the time of inspection, the appraiser must ask to have them turned on, and complete all requirements under the mechanical components of their appraisal. If it's not feasible, then a pressure test or electrical test is required, and must be completed by an appropriate licensed professional. Remember, this is the FHA one, so they have, as any FHA loan that we many have probably dealt with, they have a pretty much more requirements when it comes to the structure and condition of a home. So AFR does not permit the
Or
renovation. Oh,
it's
go ahead.
safety too, because you know getting the utilities turned on to make sure that everything is in working condition is going to prevent the buyer from running into problems later, and it's also going to help you, secure your certificate of occupancy too. Here in Michigan, because some cities require you, even if you want to pull a permit. Like I know of a city right now that in order to pull a permit to do renovations at a property, they want all utilities on, they want a certificate of occupancy on file. So
Mhm.
I mean, yeah, it seems extra and over the top, but it's for your benefit as the buyer.
Okay. So here's a question for you. When someone comes to you, they have it's a land bank property. How are those handled? Yeah, like if it's, usually land bank properties, I'm talking about the ones that are like, pretty much gutted out already, um, but they want to rehab or renovate those. They're not necessarily getting those utilities on. Is that, or am I wrong in that?
Well, I
Am I?
mean, as part of the process, you're
Mhm.
gonna like, you have to be able to provide them with a breakdown and a plan of action of, okay, this is what I'm gonna do, this is how I'm gonna do it. Like they're, I mean, the houses, they have their set standard operating procedures of how they want things done as well. So
Mhm.
at some point, you are going to be expected to get your utilities turned on. You're going to want to get permits pulled to make sure, the electrical was done correctly, the plumbing was done correctly, so that you can get your certificate of occupancy.
Okay. Yeah. Just curious. All right. So with regards to the FHA standard 203K loan, this loan covers purchases and repairs or refinance of the rehabilitation of an existing property. Minimum repair costs are 5,000. So this would be for a renovation that is above 5,000 and above. The 203B are for projects that are under 5,000. So those were for minimal cosmetic repairs. But this is more for, repairs that may require a little bit extra work to be completed. Um, a 203K consultant is required for this particular loan. And again, only one general contractor may be used. Work must begin within 30 days of the execution of the agreement. So after the purchase agreement has and all agreements are in place, work must begin within 30 days, and it must be completed within 6 months. So there's a shorter, time period of when those repairs must be completed. The amount the borrower is asking for must be within the FHA loan limits for their county and are higher in parts of the country where real estate is more expensive. So, like maybe California, Arizona, somewhere like that. And again, the 620 minimum score is in effect for this product as well. And projects must only include allowable improvements. And then these are some of the improvements that are allowed for a 203K loan greater than 5,000. And so I just kind of, put them all out here. Um, I won't read them all, but as you can see, um, there's quite a few that's allowed. Um, Anything on here that you're surprised is on here, or does it kind of fit within what you were thinking would be allowed for this particular type of loan?
No, these are all standard improvements at a property, so I'm not surprised with any of them.
Okay, good. All right. And then, so these are some that are not approved. So this would be more of a question I feel like a client might have. And those are improvements that are not permanently attached, which makes sense. Improvements for business or commercial purposes, that makes sense too. Landscaping is not permitted, such as hardscaping, sod, trees, shrubbery, or their removal. And then in this particular role, luxury items are not allowed. Swimming pools, hot tubs, tennis courts, gazebos, things like that, which are allowed in the Fannie Mae home style. So, and I feel like I might have, but okay, yeah. Was looking for one more slide, but I think that I captured it already. So yeah, so these are the improvements that are allowed under the 203K loan of greater than 5,000. Under 5,000, again, those are more cosmetic repairs, maybe painting, maybe, adding, baseboards, things like that. Um, yeah, so I think that that kind of completes what I had for now. But as I say, we're a work in progress. There are maybe questions that you might want me to add to this slide. I already have a couple myself. But did you have any questions or any additions that you might have regarding this?
I didn't really have any questions. When you now, like your main, when you do your consulting with clients and you have your loan officer hat on, do you ever present these to your clients that like as the loan officer? I mean, I know you're, a realtor as well, but
Mhm.
as a loan officer, do you ever say, hey, this might be an option? And then how do you segue into that conversation with that particular buyer?
I have not had a conversation. Well, let me take a step back. I have had a consultation with the buyer. She was also a realtor though, and she wanted to know pretty much the information I presented right now. Um, what's allowed, what do I have to do? But I think what stopped her was the time frame. Like she needed to move fairly quickly. And again, like these aren't loans that will probably close in 15 days. It's going to take some time.
Right.
I would probably, I would mention it, but I feel like the way that I would mention it would be more, this is an option. You would qualify for it. These are some of the improvements that would be allowed. And then it would kind of maybe fall to the realtor to have a conversation with the lender because I feel like the realtor is like that that person in the forefront, you know what I mean? Because when they're showing the homes, they can have in the back of their mind what repairs would be acceptable because the buyers, I mean the buyer, yeah, the buyer's probably not thinking, in terms of they don't have a list of what the lender shared with them. You know what I mean? So I
Right.
think that's probably the area of opportunity is how to have that conversation with the client and who has that conversation with the client. Is it a continuum? Like, are we all just kind of working together? Do we sit maybe in a consultation together to kind of share? And I feel like it would be something that would happen before they went house shopping because once you get into the house shopping, do you want to, or maybe it happens after they started house shopping and weren't successful. So that's something I've been thinking a lot about.
Well, I think it would be helpful to do it before they begin house shopping because it puts them in a power position, and
Mm,
knowledge is power. And so the more you know, the more comfortable you're going to be with the process. So they know their options up front. Like, okay, you guys have a credit score of, 580, you're eligible for these particular programs. Okay, you have a credit score of 620, you're eligible for these, so that they know going in that, okay, hey, this is what I'm eligible for. These are the programs I qualify for. And it takes some of the anxiety out of it as well, because
Mhm.
they know that there's more than one way to skin a cat. Okay, hey, we're putting in offers, we're getting shot down, people are giving appraisal guarantees, we're not, making it, even our offers are just being tossed to the side because they're just not making the cut. Okay, so here's another set of options that we can explore because you already have had that conversation with them. So I
Mhm.
think that that's something that when you're doing the buyer consult with them and you're figuring out, okay, what is your vision of the house of your dreams? Is it a house that's new construction? Is it a house that is, um, needs maybe a little bit of fixing up? Or is it a house that's just move-in ready? So you kind of have, you've felt them out and you know what their needs and their wants are. And then that way you can kind of, present different products to them and, point them in the correct direction. Like, okay, hey, I have a loan officer who, is well versed in, different renovation loans. Is that something that you would consider? At least having a conversation about it so they know going into the process, oh, wow, I didn't even know that that was something that was available.
Mhm.
Because if they don't know, then they just don't know, but if they know going in, it's like, oh, okay, well I have more than one option. I don't just have to find the perfect house. I could find a house that maybe needs a little work, put an
Mhm.
offer in on that, bam, get my offer accepted, and still get to the finish line.
Mhm. I agree. So I'm still trying to piece together the part of putting the offer in, knowing that the house needs repair because you have to have enough available to be able to cover the renovations. For example, if they're thinking that's the direction that they want to go in, a house that's 110, you know, they're qualified or pre-approved for 110. They wouldn't necessarily want to put an offer in for 110 because remember all that's going to the seller. So they would have to be able to have like that, have a idea of what the cushion is so that they would have a house putting an offer in that's lower than that. You see does that make sense? So I'm still
Yeah.
trying to piece together what that part looks like because I think that would be, especially in this competitive market, they would actually have to look in a lower price point for a home. So they wouldn't even begin to like they wouldn't start out looking at homes for what they're pre-approved for. They will look at homes way below that, depending on what type of repairs they want to have. That's it. So that's the part that I'm kind of trying
Well,
to
it,
see
it
how.
up for them too, because if you're approved for 110 and
Mhm.
like, okay, I'm approved for 110, but I can also qualify for these renovation loans, it opens up the playing field more for them. Like, okay, I don't just have to only go for houses that are 110. I can go for a house that's worth less than 110. I
Mhm.
also have this other option of this renovation loan. So there's more inventory that's available to me
Yes.
as opposed to, okay, I'm in this box of the 110. And if it's a house that's over 110, then, I'm out. And if it's a house that's under 110, okay, well, I'm not even thinking about those. Like you're training their brains to think outside the box too. So I think it's very beneficial to
Mhm.
at least have those conversations with the potential prospects, and let them know what's available.
Mhm. I was thinking of creating a script, kind of, as a realtor, this is how you could approach your client. Because I'm thinking as a lender, I could have the script too, but when they go to the realtor, they would need to the realtor would be the one that says, okay, I know you want a home, you're approved for 110. Why don't we, based on you wanting or our option open to having a renovation loan, let's look at homes that are maybe 90, or 85 to see, if you could fall in love with something that you could create yourself. I'm trying to think of a script that I would come up with, and I think I'm gonna work on that too, and maybe add it to the end of this slide. as since we're making this a work in progress. Yeah.
Yeah, I think that coming up with a script would be really good, and I'll work on one on my end too, because I do follow scripts, but sometimes when you're talking with people, you want to kind of tailor it to, what their needs are, and but if you do have a script and like a blueprint to follow, you can stay
Mhm.
on task. So I think
Yes.
that's definitely something we should work on.
Yeah.
So, well, I found this to be extremely informative, and I definitely am open to doing other ones on other topics. I think that, knowledge is power, people wearing multiple hats, and of course, us having in common the dual careers. I
Mhm.
think, we should collaborate on some other things as well, so I'm gonna have my significant other to edit this for us so that we can, put it up on social media. What
Okay.
is your social media? Because I'll have him plug that in for us as well. So if
I am
anyone wants to, reach out to you and they want to, discuss these type of loans, how can they get in contact with you?
okay. On Instagram, I am Chandra Nicole Funding Dreams. And I will have to look up my Facebook one because unfortunately I don't memorize what the actual hashtag is for that. Tell him
Okay.
to edit that part out.
Oh yeah, he's very good at editing because he's actually a blogger too. He blogs
Oh,
on Instagram.
good.
So he's that's like my technical support, like whatever I
That's
need.
awesome.
Even my why I joined EXP, he helped me to record it. He interviewed me, he helped me with everything. So yeah, he's awesome. So mine is Adrian Ponce Realty, Adrian underscore Ponce underscore Realty. For my Instagram, I do have a Facebook business page, same name. I have a link tree. I have, multiple social media things. I'm on Twitter, I'm on Pinterest, I'm on Facebook, I'm everywhere. So
Mhm.
that's where people can find me if they want to talk real estate, they want to talk contracting, they want to talk property preservation. Those are the places where they would find me.
I guess I could mention I do have a link tree. So
Oh,
all of
good.
my links are on there as well. And that's just Chandra Lake, and that's Chandra Lake. So,
Okay, good. Yep. And mine is Adrian Ponce Realty for my Linktree. And I think Linktree is cool because it's so easy to design and it's just so convenient. And if you are a serial entrepreneur, which obviously you are and I am, you can put everything right there. Because I was
mhm.
talking to one of my girlfriends, she's like, why don't you have your real estate website on your main Instagram? I said, well, for one, my main Instagram, I started when I was a bartender, so it's more like a fun Instagram. But then I have
Yeah.
a separate one specifically for real estate,
Mhm.
so I have everything on my link tree because I don't just have, one company, I have several. So it
Right.
to me, that's perfect when you have multiple, things that you're doing is to have that link tree.
Yeah, and I keep forgetting about it actually. That's why it was an afterthought. I should mention it a little bit more because I have everything on there as well.
Yeah.
My Instagrams, I have an Instagram. I did hair as well, but I cut that. I think you heard that on the X when we were on our Power Starter day that I cut back doing hair. I was doing hair on Saturdays, but when I started real estate, Saturdays